All right, everyone. It's going to take a second to get this up and running, and I believe we are live on YouTube. We are live on Twitch, and I believe we are also live on Kick as well. Happy everybody, June 4th, 2025. Just going to check out what's going on in the markets. Been finishing up some work stuff and really just getting to the place where I can wind down for the day and actually check out some things. Looks like from my perspective, things been holding up. Bitcoin 104-ish. Let me share my screen really quick. The Robinhood portfolio is doing BN, as some may call it. Let's see. Let's move that there. So let's see how Bitcoin's doing. Bitcoin's doing all right. 104, 105. Where are we at? We're still kind of hanging out flat. This 104-ish. We did peak up at about 110, 111. I was really thinking we were going to start going to the moon here about a week and a half, 2 weeks ago, but nope, we are here. But at least we're staying rather consistent. Let's check out the baby Rocket Lab, my second largest position of the portfolio. Up 19 or so percent, just below $27. I was gonna say 72. Little dyslexic moment there. I saw Palantir earlier. Steve called me. We were talking about Palantir going to zero. Don't know what caused a little bit of the retracement today. Was a little bit surprised to see it down 2.5%. But as we know, even with the broader market, which I don't even know how the broader market did. So let me just do that before I start making assumptions. I mean, the broader market was flat. So was everything flat? Let's check out the Qs. Qs up slightly, mostly flat. Let's see what else. The Russell, let's check. The Russell pulled back a little bit, down about 1/3%. But still relatively okay in the grand scheme of things. Going back a month, we're up 4%, 5% on that. And then what about like semiconductors? Let's see. How are those bad boys? It's historically been not doing well the past years. Check this out. Down about 8%. And if you did triple leveraged, way down for that bad boy. But okay. I think with this Nvidia movement upward early last month, and obviously that's coming off of the tariffs. So let's see, what's Nvidia hanging out at? 141. Congrats to everybody investing in that. Getting back close to peaks. It was like 150 7 months ago. So hopefully our friends. I actually had 125 puts that I had sold like right before the whatchamacallit, the news, or maybe it was like right around here, like the February timeframe. I like sold some 125 puts and I had to hold them through. I thought I was going to have to be assigned like 300 shares of Nvidia, which would not have been the worst thing in the world, but gave me a little bit of a pucker. But the big one that's been moving the past few days is the me and Mr. Patel special. Venture Global over the past month up 76%. Obviously, if you're in it since IPO, no bueno. But I believe that we're starting to see a little bit of love. I think people are starting to actually see what's happening at Venture Global, what the potential of it truly is. And I think it's just the beginning because there's 2 additional facilities beyond this that will continue to demonstrate its value. So nice to see it at 15.25. What does this mean? The market cap is 36 billion. So this will be larger than Cheniere once it's done. This facility, right? So Cheniere, to give people context, it's about 70 MTPA. They're going to try to grow it to about 90 MTPA. And that 90 MTPA, granted that 90 MTPA is not in the works right now, but they're trying. Once that 90 MTPA is up, I assume that this is going to climb into the 60 to 70 billion market cap range because that revenue kind of comes up a good bit. I mean, you're talking a lot of additional cash flow coming in with an additional 20 MTPA. And so I'm assuming you're going to see this climb to 70 billion at a minimum once that expansion happens over the next 3 to 4 years. I mean, when you're just looking at how well Cheniere has done over the past year, over the past 5 years, phenomenal. And so, I'm not going to be surprised that once Venture Global does its thing, I mean, I'm not expecting it to, um, $200 some dollars a share. I would anticipate in the longer term, I think we have about 2.4 billion shares. I could see this going to above 100 billion market cap. So I mean, I could see this going to $40 a share pretty easily. And then I could see it paying 41. I could say it paying a 3% dividend on that. It'd probably be more buybacks, but you think about it, they're paying 7 cents in dividends right now per annum. It'll grow to be about $1.23. I mean, if you're looking at it, you're potentially yield on cost. If you were to buy today, yield on cost will be about 7-8%. I think this 120, 150 dividend is potentially light. I don't know. I don't know about that one. Let's see. The big winner for me, I believe, will be this potentially back up to $8.40. This is next decade, another LNG. I'm not buying, for anybody that's curious. I'm not buying oil stocks right now. Let's check out how the big monster's doing. Oh, 102. Okay. The monsters are falling. And I know Chevron, I know some people that are really dividend focused are starting to pick up Chevron. I don't hate it. I just think that unless there's some massive influx of demand going into summer, I just don't see it. You're seeing China move themselves away from fossil fuels. You're seeing a lot of other countries transition to LNG and exports. And a lot of that's the US's fault. Like the US has expanded their LNG capacity to overtake Australia, Qatar, and really have grown that industry pretty substantially. And so a lot of countries are like, look, it's cheaper, it's cleaner. We just have to import it. So I don't know. Like a lot of people are just like Europe specifically, like Europe doesn't want to create their own oil and gas anymore. They'd rather import it. I mean, aside from Norway is doing phenomenal in terms of oil and gas production. So I shouldn't say nobody wants to do it anymore. And the UK's industry is okay, but it's dwindling, right? It's no longer the powerhouse that it used to be. I shouldn't talk too much about it. But anyway, I think with that, you're seeing more reliance on LNG going into the 2030 timeframe than you are for oil. And so I think that that's showing up in the oil price. So let me maybe just bring this bad boy up. As I predicted, a couple months back, if you follow me, you do, you don't, it's fine. I don't, I'm not going to penalize you. When we were hanging around, late last year, mid last year, in the $70-$80 range, I was kind of thinking we'd be getting to this dip, and here we are. And if we actually do get resolve in Ukraine, we get resolve in the Middle East, it's only, in my opinion, going to get worse. $62 a barrel in US, 65 if you're kind of looking in the UK. So I don't know. It's one of those things, and there's no how do I say this, which makes it even better. This is with OPEC. This is with OPEC curtailing oil and gas production. So to me, it's like, have we seen the worst of it? I think you really need to see potentially companies have to dig into, cut dividends, cut buybacks substantially, really start to suffer, really use their balance sheets a little bit before you actually, dive in and try to save the day. So, I mean, is it okay to start accumulating shares here? Yeah, I just wouldn't go heavy if I was, looking at it. But there's some great ones out there. Some great, bolt-on companies that you could potentially look at and buy that are somewhat struggling year to date. There's a few out there. One that I still have yet to see, which is why I'm like hesitant. So Schlumberger, Steve and I have been talking about this one for a while. It's obviously one to watch. The oil and gas industry, like everything else, goes through inflation and deflation. So when oil prices drop, like they have over the past 6 months. Sorry, I don't know why it's getting stuck. Oil prices have dropped like they have over the last 6 months. You're going to see capex cuts at the big or majority of oil companies, or OPEC's going to lay down rigs, or what that ends up doing is really hurting these guys. So what does they do? In order to make it competitive, they have to drop rates, they have to cut people, so that way, you can do more for less, right? Like otherwise, you're not going to be able to get as much rig going, more work going, etc. So the cost per day to drill, to do work, do well work, exploration drilling, etc., has to come down. Otherwise, they're just not going to do it, right? Things that might have cost, 50 million bucks have to come down to 30, 40 million dollars. Otherwise, they're going to be like, you know what? We could push it off a year. And so until you start seeing that happen at some of the service companies, and you're seeing day rates for oil rigs go down, um, it just means to me that you have a little bit of time. I've yet to see, like, we're still in a high price environment in terms of getting things done. There's still a lot of inflation that's been built into the system since the downfall of 2020, when oil prices went negative, to today, or the last 6 months or so, when oil prices were, went to $122 a barrel back in February to July 2022, to now the slow decline. Actually, this Schlumberger probably mimics it pretty well. So it's like, you know, you see all this beautiful, it's a slight delay, right? This is the beauty of it. It's a slight delay. So 2020, obviously, everything hit the fan. It doesn't look good. It gets even worse 6 months after oil prices go negative. But then as prices recover, you see this 6 month delay. So here we are, like, this is when oil prices were peaking, um, because of what was going on in Ukraine and all the supply chains getting moved and everything. But it didn't really happen in terms of seeing the benefits and the actual, maxing out of inflation in the industry until 6 months to a year later, which is when you actually started seeing, better prices in the stock. It's not all-time highs, but better prices in the stock for Schlumberger, Baker, etc. And here we are now. We're still, if you think about it, living off of contracts that were signed 6 months, a year ago, because all this stuff was put into motion 6 months to a year ago. So you really have to wait till prices get bad, and then there's a delay effect, right? People still have work that's been scheduled for 6 months to a year. And once you start waiting until to backfill those opportunities, backfill those projects, people are like, oh, we don't have the cash. We don't have the cash. Ooh, we have to watch our wallets. People are holding their pockets. So anyway, maybe a little bit of awareness for you guys in the oil industry. I don't know about you guys, but I watched the Jared Isaacman All In today, and man, it absolutely was it absolutely phenomenal. So I'm not going to share, like, or even play out of the audio, but I was just flabbergasted. If you guys haven't had the opportunity to watch through this yet, I would go ahead and do it. Um, Man, they did a phenomenal job, not just covering all the drama. And for those of you guys that are following it, maybe you're not. I'm a space enthusiast. I'm not an expert. I'm an enthusiast, and so I personally love everything space right now. Like I said, a lot of it goes over my head because look, I'm not even a great engineer in petroleum engineering standards. So to think that I would know anything about NASA and space, I'm more of a hobbyist than anything. So a lot of it goes over my head. But I went through basically Isaacman's career since he was 16. And for those of you that may or may not know, Isaacman um, is a gentleman who started a company called Shift 4 back in like 1999, um, around the same time that Elon was, finishing up PayPal before they sold it to eBay. And with that, he kind of got his way into it, and he started becoming pretty well off because of it. And then eventually, he grew to basically become an enthusiast with flying, and then eventually space, with the ability to eventually go up in Inspiration 4, which for those that you know or don't know, SpaceX sent up 4 civilians in a Dragon capsule back in 2021 timeframe, and Isaacman was part of that. And then they went up to a subsequent mission, etc. And so that, coupled with another company, which I didn't even actually know, he actually started up a contracting company for the Department of Defense, which kind of exacerbated his love for flying. And talked a little bit about that and how he knows a little bit more about the government and everything like that. So I would just really encourage you. I learned a lot from it. Um, and I know Tanner actually did a really good job as well, kind of talking about this. And I know Tanner's a Shift 4 guy. So I actually would love to. I was bugging Tanner, when the hell are we going to Mexico, my guy? Because Tanner's a smart dude, and he looks at a lot of these fintech companies, and I know he's big into Shift 4. And so I'd love to, sit in under a cabana, drinking some margs or something, and really picking Tanner's brain, because he's got a lot of stuff up there, and I'd like to learn from him. But about that, and specifically Tanner, he did a really good job covering the fireside chat that SoFi had just done. So they had the CFO on, and man, I would just like to iterate, as much crap as I love to give SoFi, um, and as much crap as I love seeing, these bulls get. At the end of the day, SoFi is a great company, and I actually do think that it's not a horrible buy here at $13. And so, for anybody that's actually looking for something that they don't mind investing in a bank, because yes, I believe it is just a bank, and I think Tanner actually he polished his message a little bit, or maybe it's me. I didn't have bear glasses on today, because sometimes I do, and I apologize when I do. Sometimes I get very vindictive and aggressive and go after people. But he said it's a tech-enabled platform, which I agree. Like, without computers and things of the like, SoFi will not be. It's a digital bank, and without technology and applications on your phone and stuff like that, is obviously, hopefully, the ease comparative to, say, like a brick and mortar, right? So my hope is, like, you'd be able to enable a lot more things on your phone or your computer from SoFi than what I have to do with Wells Fargo. I'm a Wells Fargo customer. In fact, I would actually like to not mind trying SoFi, especially if they have other bank products. Because, to be frank, as though I don't mind Wells Fargo, but at the same time, knowing that I have multiple mortgages now, and multi-million dollars worth of real estate on a gross basis, not necessarily a net basis, but on a gross basis, multi-million dollars worth of real estate that I'm involved in, it's like, you kind of need to have the best folks that give you the best mortgages. And so that's kind of where I'm at. And then same thing with, like, me eventually getting more into security-based lines of credit and all that, it makes sense to kind of shop around a little bit. So if that just means throwing 100, $200 a month, or even a paycheck into SoFi to get the direct deposit benefits and see what kind of products they have, it's probably worth it. And actually, it might be able to get me like a small return. Like some of those banks, you ever get those things from Chase or anything like that, where you're like, give us $1,000 or direct deposit, set up direct deposit, we'll give you $200 in a month or something like that. It's like, interesting. Is it worth that 20% return or whatever it ends up being, just to set up direct deposit? And I'd say probably sometimes. But anyway, enough about that particularly. I just want to say I appreciate you guys. Like for some reason, I'm fine. I'm not depressed or anything like that. But what I am actually going through is a little bit of a struggle. Like, so I've obviously done pretty well over the past year, couple years even, with the market, and I'm really just trying to figure out what's the next lens. And I don't know. I'm tossing around a lot of ideas. Am I starting a small business? Do I open up an e-commerce store? Like, what else can I do other than playing video games, which have been a huge time sink for me, and I regret kind of doing it. Over the past couple months, I would like to get back into being productive, and so with that, I'm like, what do I do? And you guys have made it very easy for me to always come on here and be welcome. I get mixed responses on X, which is fine. I know I'm not the easiest person to get along with, and I know I call people out when I don't agree with them, and so that causes a little bit of controversy. But when it comes to coming live and hanging out with you guys and chatting with you guys about markets and my thoughts, YouTube has always been a place where I feel very well received. And so I just want to say I appreciate it. Like, today is a day where I'm just like, you know what? I'm very bored. I don't necessarily know what I'm going to do. I've been like dragging down about what am I going to do next in terms of getting myself to the next level, right? Because you guys probably know the portfolio is doing well. I've been saving. I obviously don't live a very lavish life. I live in a very like modest 3-bedroom, 2-bathroom house. So I'm not out here balling on houses or anything like that. I spend the majority of my money investing. It's my biggest hobby. And so I'm sitting here being like, well, what do I do next to get myself to the next level, right? And so in that respect, I'm kind of just sitting here, and so I'm just like, you know what? Like, let me just go on YouTube today at some point and just drag on and kind of see. So anyway, I also wanted to come clean about something that I said about Palantir on Friday. So I was talking a little bit about new Quiver. And, I've been using Quiver now for 6-7 years, probably even longer, I guess now, because I guess the first time I used it was probably 2016, 2017. So it might be going on getting closer to a decade at this point. But I keep saying 6 or 7 years, so I just keep reiterating 6 or 7 years since I've been doing Palantir Weekly and stuff like that. And I just keep using 6 or 7, but I'll say since 2018 timeframe. And so back then, the ontology was still real, right? But the prolificness, the extent at which ontology was built into the original Quiver wasn't necessarily there yet. And so Quiver was kind of a new product that at the time was just being kind of commercialized, and it might have been a couple years old. I don't necessarily know when they created Quiver, but it was kind of initially set up for sensor data to write time series on and stuff like that. And so me being the rudimentary engineer and not necessarily being as linked into the products these days, I made an inappropriate comment that was made out of jest and was made out of the fact that I didn't necessarily have as much time with the product as I'd like to these days. I'm a little bit more higher level. I don't get as much into the sensor data as I used to. But after looking at some of the videos online, as well as internal videos that we have at UDoc, I'm very impressed. And so, me being that person that just creates hobby Quiver charts to check up on new projects that we start up across the world, I was looking at something off the coast of West Africa. I wanted to create my own thing. So I was using it like Google search. Like, how you have that little toggle up top. I guess let me kind of share it. Let me just make sure I don't have any proprietary tabs or anything like that. No, I don't. So let me share this window. So hopefully that's not sharing. I think it's on mute. So how you have this up here, like this little thing. Can you see that? This little thing where it says YouTube, and you can click in here and you can kind of just like type whatever you want. Or you go into google.com, like here, and you just type in, you could be like, I want wellhead temperature, right? Like you can do something as simple as that. Like for a particular well, like that's what I was using Quiver for. And then I start going into new Quiver and looking at the potential and things that you can actually do in terms of setting up object searches, and like it just makes things so much easier. So you could literally just know that what you're looking up is so filtered, and you don't necessarily have you're not looking at all the sensors within a particular region, or let's just say the whole globe, which is something that I generally was getting, like type in, because well names could be like A this, A that. And it's like you might have an A this in the North Sea, you might have an A this in Indonesia or Malaysia or Australia. And so generally, because it's just easy to for the regulations, like A is a very simple one to go for in terms of a naming convention. So you start looking that up and you get a billion different things. And if each well has multiple sensors, it's very hard. So having that ontology built into new Quiver and being able to say filter on certain things to make sure that when you type in AX, like, or AY or AZ in terms of numbers, you're getting closer very much faster than you were than how I was previously using it. And so I just wanted to kind of iterate, like, I have a very rudimentary like usage of it. I started using it, however many years ago, and I haven't really, unfortunately, been utilizing it to its most extent over the past 3 years or so since new Quiver has kind of been implemented. But looking through and talking to people internally at UDOC, the videos, etc., have really opened my eyes to how much easier Palantir is trying to really make those products. And so while I was kind of giving crap and kind of digging, I wanted to make sure that I corrected that, because they're just doing great things over there. And the things that make me upset, are I also went into like our app store, our internal app store the other day. And, I did it a couple years back. I took a screenshot, put it on Twitter. And I think at that time we had like 40 different applications that could be built on Foundry. We're up to like over 80 now. And it just kind of makes me sad that I don't get to that day-to-day relationship, building products and building workflows within Foundry, especially now that we have AIP assist within UDOC, and I don't really get to use that. Makes me kind of sad. So hopefully one day, if I switch roles, which I don't anticipate switching roles in the next 2 to 3 years, but if I do, hopefully it gets back to something super technical, and maybe I can join some of these teams. So we literally have an internal team at UDOC that focuses on this very heavily. And I like asked him, I was like, am I dumb? Like, and he was like, yeah, dude, he's like, new Quiver's the best. It's like, we have to finish the third video for internal, but third video is great. And hopefully who you are if you're watching this. He watches from time to time. And but anyway, so I just wanted to make sure that people know, like, I made a stupid comment, but at the end of the day, with some further research, man, I'm always just impressed by Palantir and their ability to be so forward thinking. And I haven't used a fraction, unfortunately, of the products. And I'm sure if I have, then I'd be able to say so much more great things. But unfortunately, I can't, because I don't have the experience. So let me just go down the list. I'm trying to think if there's anything else, but let's just go down the list of people that are here. And if there's anything in particular that comes to light with respect to what's been going on in the markets, your guys' questions. I also wanted to state that I've started um, a proprietary portfolio that is meant to be hands-off ETFs. I don't know. I'm trying to decide what I'm going to do with it. Originally, I was going to write articles on Seeking Alpha about it, and then I'm still trying to decide if I want to unleash it to the world. And it's not like super proprietary, right? It's just like taking 2 or 3 different ETFs that tries to do multitude of things. And I've actually kind of really been polishing this message. Is my initial goal was to, over the course of say 10 years, match very closely the gains that you get from the S&P 500. So basically match the market, but get slightly more dividend income. And so with that, there's a dividend ETF that I invest in that very much tries to replicate the S&P 500 to an extent. And some of it is just the S&P 500. So you're investing partly in the S&P 500. Part of it is a leveraged product as well. And so I'm trying to figure out the best way, to help people with that. And I think with that as well, it's like, even if you were to say, I don't need the entire, like, let's just say you're getting close to retirement age, like, Matt, I don't need to meet the market returns anymore. I'd rather just increase my dividend income to closer to 3%. I think there's substitutes or percentages change that we can do to get you closer to that, and really still kind of replicate the market, if that makes sense. So you might not have the same amount of total alpha, but in terms of being able to replicate the movements and being pretty much in line, just although slightly dragged in terms of total performance, like your principal might not go up as much, but your yield will be about comparable. And so I'm working with it, and how I actually get it out to you guys. Um, Goal of 15 to 20%. You're crazy, lady. Um, Anyway, and I think that's something that people need to recognize is like 15 to 20% is good in a good year. And I think that sometimes I hear people talk about it all the time, like 20% annual average returns. It's like, Warren Buffett, who's one of the greatest of all time, averaged like 20 to 25% average annual returns. And he's literally a billionaire. So he spends 60 to 80 hours a week in the office, and I'm sure potentially even more at home in Omaha, looking at these things. And not only is he doing that, but he's also an active investor in multiple businesses. So not only is his stock portfolio growing at 20 to 25%, if he finds a great company, he buys it outright and utilizes that cash to either invest. Anyway, so I'm just trying to say, like, I think a lot of people have this expectation that they could be able to get 20 to 25% per annum. And I think they really need to review that, you know? So sorry to burst anyone's bubble. I think back in 2020, 2021, post-pandemic, when a lot of people entered the market, and Robinhood and many other companies made it super simple to be able to join and start investing at zero commission. So a lot of people tossing around, oh yeah, dude, you can get 30% rate of return easy annual on a market. And it's like, well, in 2021, yeah, like when you're coming off of super depressed rates and the market's literally being flooded with liquidity from the US government, of course you're going to be able to get 30% plus. And great years as well, like 2023, when you're coming off of a massive decline in 2022, when we retraced by 30 something percent. Of course you're going to be able to have phenomenal rates of return. But if you just look at the SPY over the past 5 years, like, take this for example. And this is because of this massive dip. You're only up 96%. So in terms of that, like, if you were to annualize 96% over 5 years, it'd be, and this is a good time period, like cherry picking, But if you look over the course of like the max since 2020, or sorry, since 2000, so the last 25 years, you're only up 338%, you know? So in that respect, you just might say like, oh, 25, divide 3,300 by, or 338 divided by 25, like that's 15%. It's like, yeah, but when we're talking about annualized returns, it's a very different beast. Very different beast. So I wouldn't be surprised if a 338% return over 25 years is less than 10%. Hell, let's do the math. Let's do it together. Present. I'm not good with math, guys. Let's see. Let's bring this over here. You guys seeing my calculator? Not yet. Why not? Present. Window. Seeing the window. But not the calculator. Why not the calculator? Let me share the screen, maybe. Entire screen. There we go. All right. Let's see. 25 years. So we're going to start with 1 times 1.08. We're going to do this for 25 years. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. Okay. So yeah, even if you subtract 1, an 8% return over 25 years is 580%. So let's do 1 times 1.06 for 25 years. Let's see what that gets you. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3, 4, 5. Minus 1, because you started with 1, times 100. So this 338% return that you're seeing over the last 25 years is a 6% return annualized. I don't think people realize that. So hopefully that gives people a little bit more reality, right? I mean, I think when people think, they just think like simpler numbers, like, oh, I'm gonna 10x my money. It's like, well, you're going to need some pretty substantial annualized returns to be able to do something like that. So anyway, I think I've started to see some people get a little bit tired investing in the markets, and picking individual stocks. And I'd say that's okay. That's mature. I think people need to recognize where they fit. Not everybody needs to be buying individual stocks. Not everybody wants to put that time and effort in. Most people just want to read books or go watch movies or go on a run or go on trips, and they don't really care about looking at the markets. They just don't have that muscle. They don't want to have that muscle. And I think that that's really mature for people to come out and say that they don't want to do those things. Anyway, let's just go through the list of people on here. Appreciate 120 of you guys chiming in. I know that I don't normally do these sorts of things, so it's hard to kind of just like time when Matt is going to go live. But I wanted to go a little live earlier, but unfortunately, I was knocking out a fly. I was knocking out some things, and couldn't get on closer to 4 p.m. my time, which would be about 5-ish, so a little bit closer towards the market close. We got Garjap, AK Media, and Amit's a liar, a dirty, dirty liar, and you can clip this and send it to him. He never reached out to me to say, Matt, you're going to take over the stream. Nor did he offer me money. If he offered me money, I would have done it. No, I'm just kidding. I would have done it for free. We got Randall. We got Trucker Rob. We got Jackie. Do you play video game? I do play video game. Depends what it is, though. We got Johnny Mac. We got BD Ben. We got Dookie Pie. Yeah, I did see that. I actually wanted to make that that live stream for anybody that's not paying attention. Actually, maybe um, pull up what Good Job was talking about. Basically, New York Times for people know mostly, but um, the New York Times. Dang it. The New York Times basically wrote an article, as we discussed on Friday, about. Let's make sure I don't have anything proprietary up now. No DMs or anything like that. The New York Times published something, and so Palantir basically is like, "You guys are a bunch of liars." I thought Arnie's response was pretty cool. New York lies, but there's a few other folks. Like I saw Chad write some stuff. A few others write some stuff to basically talk about what's going on with Palantir. But why isn't it not showing? What the heck? New York Times communication. Okay, here we go. They're basically claiming, oh, Palantir's lying, that what we're saying is true. Like they're trying to basically step in and kind of state like, what we're talking about. They're trying to create a secret database and yada yada yada. And Palantir is just like, you guys are effing liars. Like, so if you were to come and actually look, Palantir's like, the recently published article by New York Times is blatantly untrue. Palantir never collects data to unlawfully surveil Americans, and our Foundry platform employs granular security protections, which I talked about on Friday's live stream. If the facts were on its side, the New York Times would not have needed to twist the truth. And it's true. Like, at the end of the day, I don't think people understand that Palantir doesn't house the data. Palantir works with your cloud providers. That's why it was such a big deal when you saw Palantir get partnerships with AWS and Google Cloud Systems and Azure, because Palantir is about being able to connect your data and ontologize your data and get you working as quickly as possible. Get you to the answers as fast as possible. If Palantir needed you to switch all your data and everything to their cloud systems where they actually had control of your data, then it would take forever. It'd be an absolute nightmare. And so Palantir just connects up, allows you to ontologize your data, has security systems built in. I mean, I was talking about this on Friday specifically about how each user, like me as a user, has certain data that I can access within Foundry and not within my company. And I've had so many people move teams within a day, their access to old data is cut off. And they want to check on their old projects or what have you. And they just can't. And I've had people be like, why can't we just have a general account? And it's like, that's the point. Like you can't have a general account. The hope is that you have a legitimate account tied directly to you, because you are the individual, and we need to make sure that whatever you are doing and whatever data you are trying to access is meant to be. If you have a general account, unfortunately, you lose that security layer, and that's the whole point. And that's how shit gets hacked, dude. Like just a general account. Last thing you need is somebody to have a general account and leak a lot of UDOC data. Bought some MongoDB after hours in the middle of a nice gap fill. Yeah, I did hear that Mongo did well. I did not look at it though. Redwire did nice, trying to get more ASTS. Congrats. Good luck with that. Up 300% on your APLD. I don't know what APLD is, but good looks. Yeah, you got to go work, man. Work. Appreciate you stopping by while you did. Midwest, my man. Thank you for always joining and continue to support me, brother. I love you. Andrew, what's going on, my guy? Sold your VG, just consolidated in the next. I mean, That's one way. I mean, I think it really just depends um, on what you're trying to do. I think Next, the problem with Next is that it's pre-revenue, and so anything can happen, cost overruns, etc. So it's nice to kind of be de-risked in on a VG perspective. Um, but my positions are about comparable at the moment. So in the long term, I think Next, fingers crossed, will be a much larger position than I do for VG, but that's speculative. I'm very comfortable. I sleep well at night knowing I have VG because I know it makes money. I know what it is. It's LNG. It's not trying to send rockets to the moon, and I mean that like legitimately. Like, is there risk? Yes, but the risk is timing. Like, when is the time actually going to come through with the um, revenue, right? I'm very confident on the revenue streams. Like I said, we're not trying to put rockets in them in the sky. So in that respect, there's no like execution risk. Really, out in reality, there's only like operational risk. It's unfortunately something going to happen. Is there going to be a fire at a plant? Knock on wood. Hopefully, there's not. Um, but that's the sort of risk that can happen. It's not going to be, oh, I thought the revenue was going to be X, but actually showed up as Y, right? I feel like you have very little financial risk versus Next. The problem that I see with Next is you could have a lot of dilution. You don't know what that dilution is going to be. So in terms of market cap, that's why I talk in market cap a lot, and not share price, is because I could say for Next that I feel like you'll have a very good likelihood that the market cap will eventually be north of $20 billion. But in terms of the share price, are they going to dilute people 3 to 1? Like, I don't know. I really don't. I really don't know. So are they going to, like, what pace are they going to try to deliver these things, right? They're about to FID train number 4 and potentially 5. How are they going to come up with that capital knowing they need 40 to 50%? Are they going to wait to, um, are they going to wait till they start getting cash flow from trains 1 through 3? Are they going to use just basically the bank? But at the same time, you need working capital, right? So you might be able to get access to the loan itself, but you need working capital. So you got to get that working capital from the existing partners. If they do that, they kind of spot you up front. Are they going to make you, give more equity? So stuff like that. I didn't know you were my mother, and I needed to let you know what I was doing all the time. But here we are. Life is good, man. Life is good. Like I said, I think, for those of you that caught me started about an hour ago, um, I'm kind of just sitting here trying to figure out what my next moves are, in terms of what I'm gonna do to get me to the next level. You know, um, Bezos dad worked for Exxon. He worked all over the world. Was at a headquarters in Florham Park when Jeff started Amazon. Heard it here first. We got Hot George in here. We got Ryan. Any idea why Cheniere's LNG are down 50%, 31 billion, 2022? It's about spot markets. I'm assuming you're talking about revenues. It's about spot markets. How many spot cargoes can Cheniere sell? So I think they have about 90 or so percent of their cargoes are spas. So that leaves a portion at which they could sell. You did clarify LNG revenue. Leaves a portion of which they could sell. And a prime example of this actually is TTF gas price over time. And let's see if we can get a good graphic in here, because sometimes it can be a huge pain in the ass. Maybe images. Yeah. So damn it. All right. Well, this is about as good as it's going to get. And this is why Venture Global was able to pay off some of their debt. So can I do this instead? Yeah, maybe this is that. Shit. And you don't get to see everything. How does that look? It's so small. Shit. All right. So this goes from 0 to 100. Apologies. I can't, for some reason, it won't let me zoom in or scroll in. Oh, wait. Is it gonna let me? Come on now. It just popped up. Now it won't let me. Come on. Oh, here we go. There we go. This is from 0 to 100 on the left-hand side scale. And this is from January 2021 to March 2023. And prices have been around this for some time. The March 2023. It's not like they've spiked back up again. So hopefully what I'm about to say makes sense. So during this time period here, we started to see the war start and going on in Ukraine and Russia. And so Russia invaded Ukraine. Obviously, that disrupted a lot of European. TTF is the title transfer facility in Europe, the big one at least. And then they use that to kind of spread throughout. There's an infrastructure set in place to kind of spread it throughout Europe. But the other place that a lot of people got their gas from, Poland, Germany, etc., got it from the Nord Stream pipeline, which goes through Ukraine. And there's rumors as to, I won't speculate who blew it up, but somebody blew it up. And with that, obviously, that means you didn't get cheap gas from Russia, which was kind of getting in the past. And so with that, this disruption to supply chain, huge demand, obviously, for gas. And unfortunately, you didn't have supply for it because the Nord Stream pipeline was no longer. And the other pipeline that wasn't blown up was shut in because of sanctions. And so obviously you saw this big spike up in gas prices, right? So you went basically from $20 to $40, kind of at its worst, to spiking up to over $100 at its peak. And so with that, you're able to do spot pricing. And, depending on what you do, sometimes you could lock in contracts for a couple months, 6 months, whatever. And so what people might have done is, and Cheniere might have done, is they might have taken their excess and that 10% excess and used trading to basically create additional revenue in that particular year and said, you know what, we'll send it to you, we'll send you the gas, no problem, but you're going to need to buy it from us for 80 or 100. The way that normal contracts work is you'll have a company set up a SPA, the sales purchase agreement. And they say, we will offtake that gas. And so generally, the companies that do that call up specific countries or import facilities. They say, hey, we plan on importing you guys for a certain amount of time. We want to index the purchase price. So that what they'll say is like, it's going to float with oil price or gas price, depending on what you want. And so as long as we continue to make our margin, we'll supply that gas. So that sometimes what that means is like, even if gas prices spike in the US or wherever, it's going to at least provide some sort of margin that they can then use to sell to the counterparty. Well, if you're doing it at spot prices, then you sell it for whatever is at the boat. So generally speaking, to get it on the boat in the Gulf of Mexico, when Henry Hub gas prices are $3 to $4 with liquefaction fees, shipping costs, etc., you're kind of looking at $7-8 to kind of get it, on the boat. And then if you're selling that back here at 100, you're making massive amounts of revenue because you're able to sell, get it on the boat for $7-8, sell it at 100, boom, you're printing. Now we're getting back to a place where things are somewhat normal, where you're at, say, $13 to $15 an MCF. Actually, it's kind of dipped down to like the 11, 12 range as of late. And so that's why revenues have kind of shrunk from 22 to 23 to now 24. And now when you look at Cheniere, you mostly are looking at it like a utility. I've heard some people say, because in that respect, you're mostly just making money off of the liquefaction fees. So, um, and that's the way you kind of have to look at it. Like with Venture Global, for the first 2 years of a facility startup, they'll be selling at spot prices. Are those spot prices favorable, less favorable, et cetera? It's something you got to figure out. But um, it is what it is. Thoughts on ASTS? I look at ASTS kind of like next decade, right? They're pre-revenue. There's a lot of potential, but you don't know how it's going to work. How much dilution are they going to have? There's a lot of people investing in them, like very comparable to next decade. Very different sectors, right? It's apples, oranges, right? But you have people investing all over the world. Google, many other mobile network operators investing in them to be able to provide the opportunity. But for me, Bluebird One, it seems like it's been a success. I have a lot of international companies saying it's a success, it's working. I would like to see a little bit of revenue come through the door. And if that means, unfortunately, I miss out, that's fine. I'm reducing a lot of risk from the system. And so if that's the case, then to me, it's beneficial, right? You might lose out. And, just because you don't get in at the bottom floor doesn't mean it's not going to be a great opportunity. People still buy into Google. People still buy into Microsoft. So it is what it is. Thoughts on next day. Okay, we covered that a little bit. Hey, so I bought Cydio after you guys mentioned mineral. Made a quick buck as yesterday. Venom, yep. Viper announced they were buying Cydio. So there you go. Congratulations on that one. I think that there's a lot of those opportunities. I haven't outlined all of them. I want to. Those were two that were kind of on the books. I actually really liked Viper. I still might buy into Viper, but I need price to come down a little bit more. I still think we need a little bit more. What am I trying to say here? I think oil has a little bit more to kind of sustain at these prices, and the sector needs to get cold. I still think that people are optimistic that oil prices are going to turn around. I'm kind of sitting here like I don't need. There are other things I can invest in other than oil. So in order for me to invest in oil, it needs to be more attractive than it is today. Um, you know, it really depends. I don't need the dividends. It would be nice to be investing in some of these things because some of them have really good dividends. That might be your MO, So I'm not saying don't. I'm just saying for me, if I were to invest in it, I'm looking at it like 2020. 2020, your boy loaded up on Exxon, your boy loaded up on Shell, and did really well with those. And so I'm looking at it like that. Do I think we're going to go negative oil prices? That's not what I'm saying. What I'm saying is I'm waiting for blood to be in the streets before I make a move on oil. I have a lot of LNG. So LNG, as in terms of my portfolio, actually in retrospect, it's not that big. Combined, it's less than 10% of my portfolio. Right? Yeah. Like if you strip out, well, I guess if you strip out 401k and stuff like that, my individual brokerage, it might be closer to 10 if you like strip out retirement funds and real estate, everything like that. I'm thinking just like stripping out real estate, it's definitely less than 10. But if you remove the real estate, if you remove the real estate, it's closer to 10. You keep real estate in there, it's definitely way less. What were my thoughts on the SoFi? Thank you for reminding me because Tanner did a good job covering it. Man, I think I might have said this. SoFi is going to do well, man. Like, and especially being at $13 for $14 a share. I could easily see a place where in a decade, you're talking about a company that's worth, $50 billion plus easy. And so, I definitely think if you want a bank, I think it's probably one of the better banks to buy, to be honest with you. In terms of you're looking for technology, I think Tanner said it well. It's and I think I did state this already. It's a bank that's tech enabled. So yeah, I think SoFi is going to do really well. think the margins are looking better. I wouldn't mind setting up direct deposit. We got a lot of good people in here. I'm like an hour behind on the chat, so stream video games. I've thought about it. Keegan, appreciate me streaming more down to earth content. I really appreciate that. I try not to um overhype stuff. I try to be a little bit more calm. So if something's up 0.2%, I'll make a joke, right? Like something going to zero, which people have been stealing, by the way. So fuck y'all. No, I'm just kidding. But I love it. I love that that's kind of catching fire. Like, oh, it's not going to zero or anything. And I'm like, yes, feel it. Let it flow through you. But yeah. So love you. Need to find a lady. I do need to find a lady. But yes, how do I say this? It's who was it? Tom Hardy? Tom Hardy? Yeah, Tom Hardy said it best. He was like, when you live alone for a while, it's very dangerous because you just live life on your own terms. And so then when you find somebody else that, says, oh, you need to be here, you need to be there, you need to do this, you need to do that, it's just like, what kind of arbitrary shit are you trying to put on me? Like, no, I don't need to do any of that. So anyway, a lot of times, how do I say this? I'm very independent. I've been able to do things very well so far. I say there are flaws. Like obviously, I need to watch what I eat, and I need to be healthier. But other than that, I mean, I'm doing rather well in terms of being able to provide and do what I need to do as a man. And so, in that respect, it's like I don't need some woman being like, "You need to change your life and do this, that, and the other." It's like she wants me to help eat better, get me to exercise. Like I would love that. But it's like those are probably some of the only flaws. I can be a little bit negative. I can be a little bit vindictive. So if they can help me with that, I'd be all about it. But to be honest, like the things that I see and get with relationships is very interesting. Um, so they're like, you need to change up this, that, and the other. And I'm like, you're supposed to help support my dreams, right? I already have the dreams, I already have the aspirations. Support me with those things, right? And like we need to build a life together instead of just like them trying to pivot me in a completely different direction. I'm like, how do I say this lightly? And I'm not saying I need to marry somebody with money. That's not the case. I'll marry somebody that works at a drive-through. I don't really care, but it's the mentality that a lot of these, unfortunately, the women I've met have. And I'm not saying it's all women. I have great women in my life. My mother is probably still one of my role models. She's somebody, along with my father, who taught me a lot about how to lead your life and how to have a good work ethic and be able to be super respectful to people. Say yes sir, no ma'am, p's, q's, etc. But when it comes to just like bending over backwards for somebody for no reason, it's tough. Like maybe I have too much pride. Maybe that's my problem. Stream video games, yeah. You should have some vacations in Japan, some of those beautiful abandoned islands for potential retirement investments. Wouldn't mind it, man. One of my dreams is to potentially get on Grinder. Yeah, I think it'd be easier for me if I swung that way, my friend. I definitely think it would be. But unfortunately, I am who I am, and I like what I like. So, unfortunately, it doesn't lead me that way. Although my life would be probably easier if it did, but unfortunately, just not me. That's not me. I actually have a dream, and I was actually telling my sister about this. That I would have. And this is something I was thinking of back in 2021 when, like, I was pretty much living to trade every day in the markets, and I was like learning. I was like where Tevis was 6 months ago, where Tevis just learned how to sell cash secured puts, and he thought like he figured out the money game. And to an extent, with cash secured puts, you do learn a little bit about money, and it's very addictive, and you feel like nothing can go wrong until Trump out of nowhere talks about tariffs and completely wipes your account. Not saying that happened to Tevis. I'm just saying in general, like you think that nothing can go wrong until the markets go down 10%. You're like, oh shit, you can actually lose money on cash secured puts if you don't know what you're doing and you have to sell abruptly because you took on too much risk, you know? Um, so back in 2021, before I found that out the hard way in 2022, my portfolio was destroyed, being Palantir and Rocket Lab and many other companies at the time, being down, some of them 60% more plus. I was just like, you know what? I'm just going to buy houses in all these different countries and I'm going to move to one every month. So I'll have one in Houston, then I'll have one in Indonesia, and I'll have one in, Thailand. And every month I'll just move. And if people want to come and visit and hang out and trade and this, that, and the other, like, fine. But if they want to rent it when I'm not there, like, obviously, if I know some of you guys, I've met some of you guys. Like, if Doug was like, Matt, like, I'm in Indonesia, and I'm like, I'm in Indonesia too, come on by. Like, I'm not going to be like, hey, Doug, I know you're staying in my room here. What are you paying me? Like, I'd be like, I'm already here. Like, I'm not using the room. Come hang out. But, if some random person on the internet was just like, hey, I'm in Indonesia, I'm like, I'm not in Indonesia. So, like, if you want to be in that house, unless I know you very well, right? Unless you're like a very close friend of mine and we're actually like buddy, unfortunately, you're probably gonna have to Airbnb it. And I've actually had a couple people at this point have messaged me like, hey, I watch you on YouTube and I knew that you had a house down here, so I rented it. It was actually pretty interesting. I've had a couple people now, so shout out to y'all. Because the houses are doing well. The one's doing really, really well, better than I was forecasting. The other one's underperforming a bit. I want to give that a little love. I think with like, anyway, we don't necessarily have to go into that. Good recommendations. You got some good ones. Bros, Palantir, Rocket Lab, next. Others, why don't you start your own investment company and manage other people's money? I try, man. And it's why I don't do Patreon. It's like I started doing Patreon like pretty seriously for like 2 or 3 months. And just the questions that you get, like, it's like, I know everybody can't read or follow everything, but it's like, Matt, the stock went up 2% today. Are you selling? And I'm like, generally, I try to be very transparent, right? So, like, notice how on this list you didn't put Celsius, you didn't put what's the other one? MicroStrategy? No, not MicroStrategy. Super micro computers. It's like, because I explicitly, when I entered those things, that they were quick trades, right? And maybe I would establish bigger positions, but I never did, right? Like, so Celsius, I made once they did the quick run up, like, it was a small position. I was like kind of trying to swing trade it. I was waiting to see if things were going to start to really move in the right direction before I initiated a larger position. And it went up so fast, so quickly that I was like, you know what? I'm just going to sell out of this. And same thing with Super Micro. Super Micro was a swing trade, right? So it's interesting that you don't write about those things, but you write about Bros, Palantir, Rocket Lab, Next, because those are things that I talk explicitly about holding for 10, 15 years, maybe more. And so, like, it's interesting when people are like, it went up 2%, you selling? It's like, I don't, this is a kind of a quarrel. It's like selling stocks. How do I say this? I don't look at things like I want to sell stocks anymore. I buy things that I think I want to potentially hold forever. And I'm not trying to like be like Warren Buffett or anything like that, but I used to think that the end goal was to sell stocks. But it's like I've started to realize, when's the right time to sell Microsoft? When's the right time to sell Google? When's the right time to sell Amazon? It's like, I'm still buying those companies. And I would still, and who would have ever been like, yep, let's. So the goal is never necessarily, especially if you accumulate enough, which I've gotten to the place now where I'm like, I would never sell it. Like, unless something drastic were to happen, like, unless, say, Rocket Lab were to go to $100 billion market cap today, I'd be like, I'd have to sell it, right? Because with what I know today, And people are like, but what if out in 10 years, if it gets to 100 billion? I'm like, what's changed, right? With what I know today about a company, I can make a decision. Like if it was X, I would sell, right? So, um, prime example is Rocket Lab. It's like, with what I know today, do I think it could be worth more than 100 billion? I would say no, with what I know today. But they could come out with, Matt, we're going to do X, we're going to do Y, we're going to do Z. You start to see all the things that you think were inklings pan out. They're part of Golden Dome. They're part of this, that, the other. They're leading interplanetary space missions to fucking Saturn, stuff like that. It's like 10 years time. If that's the stuff that's going on, it's like, it's 100 billion. Am I going to sell? So it's not like everyone wants this to be an X and O sort of game. And unfortunately, investing is very gray. It's like, you have to do what's right for you. You have to have your own convictions. You have to do, so some people might not be investing in companies for price appreciation. They could be investing for dividends. And so you really have to understand what's right for Matt might not be right for me. Just like how where Good Job said he sold VG for Next. It's like, I can't fault him for that. And if I had more nuts, which I don't, I would probably do the same thing, because then I would be able to double my next position, because they're about the same now for me. And in reality, do I think VG is going to outperform Next in terms of total return? No, but the financial uncertainty with dilution and things like that makes me nervous. Versus with VG, I don't see that potential. Like going back to, I don't see that financial risk. I see operational risk, just normal operational risk, and of course, there's always black swan events that can happen. So, in that respect, like you just have to kind of think about where you want to be. And unfortunately, I don't want people questioning my every move, and so that's why I don't manage people's money. I don't know if I have the patience. Stock went up 1%. Matt, are you selling here? Like, no. Like, I hated that. I still hate to this day people being like, hey, it went up 1%. Are you selling? Like, no. Did it hit 100? Did Rocket Lab hit $100 billion market cap? Like, you know what I mean? Like, I try to be very transparent about things. Like, if Venture Global went to a $50 billion company tomorrow, would I sell? Probably. Like, I feel like I would kind of have to. 50 billion might be light. If it went to like a $75 billion market cap company tomorrow, I'd be like, I kind of feel like I have to, because it's already at 50% of its market cap max. I think at max it could get to 150 in today's dollars, of course. So 10 years down the road, 150 billion market cap today could be, 250 or 300. I don't know. Depends on the value of the dollar. So it's hard. I think people put things too much in a box. I have thought about starting some, but I don't have enough Bitcoin to make it a treasury. I do not play Final Fantasy. If anything, I play like World of Warcraft, which was a big mistake. I haven't played World of Warcraft for like 15 years. And next thing you know, Steve was bugging me. My other buddies were bugging me. So, yeah, I appreciate everybody wanting me to focus on my health. I appreciate y'all. I love my time for your health. If you haven't run, lifting, yeah, I appreciate everybody. Words on my health. I appreciate you all. Sense 27, what's going on, my guy? Jesus. Midwest, always with the bangers. Let's see. I think we covered this one. Yeah. I think I replied to Chad basically. Mess with the bull, you're gonna get the horns or something like that. Never going to zero. Yeah, they're all going to zero. Bitcoin, Palantir, next decade. Dougie D, when we go in Mexico. 30% minimum. 30% minimum. What's Steve? Where's Steve? Yes, we are very spoiled by the last decade. Sorry, I'm like 40 minutes behind too. Need to get faster. The dumb to hold TSLL and NVDU. I don't like those things. So they're just not for me. I don't know much about them though. So don't take my opinion. Find somebody who has a better opinion because I don't really have one, unfortunately. First time chatter and everything. What's going on, man? Much appreciated. Thank you for showing up. APLD for almost a year. Glad the lease deal is finally done. 35% short float. Squeeze on. Good luck with it, man. Yeah, I don't know much about it. I really don't. Kratos, buy, sell, hold. I should know more. But I don't, unfortunately. Anyone a NASA administrator nominee is out? No, I don't. And actually, I did see Wendy start going off. Somebody said ex-Palantir Wendy Anderson went off. Actually, now I'm kind of curious. I keep always forget that she left. Unfortunately, actually, because I really liked seeing her posts and Chrome tab. So what did she say? On this start, I speak solely for myself. I departed Palantir in April. It was okay. I remember we're being recent. Share my new chapter soon. Our person's simple to call for honest and accurate reporting, especially in the era increasing. So this is tweet 2 out of 11. Plenty of people have valid criticism of Palantir. I at times raise concerns while there, as the culture encourages. I believe in speaking up. Also believe in getting facts right and straight. Criticize what you find problematic, but start with the truth. Inaccuracy number one. Trump taps Palantir to compile data on Americans is fundamentally wrong. Palantir doesn't do that. It provides software that helps organize and analyze data to organizers already possess, kind of like what I was saying. Yes, it's not a data company. They strictly connect you and help, organize the data. They do not store anything. So the article suggests Palantir is a building a master database, and that's not how Foundry works. It's a data integration platform connects to existing systems, like I stated. So very good on that, which could easily merge data onto Americans. This framing makes standard enterprise data integration sound sinister. Many companies and government agencies use similar tools to work with data across multiple systems. Isn't unique or nefarious technology. Inaccuracy number 4, the article seems to conflate what software can do with what it is doing. Yes, data integration tools can theoretically be misused. So Excel, SQL databases, or any data tool. The article provides no evidence of misuse or only fear about possibilities. Fear mongering by billionaires, in my opinion, is what I said on Friday when that article came out. Describing routine government IT modernization as surveillance infrastructure, agencies updating their data systems and that analytics capabilities is normal and actually necessary, in my opinion. A lot of these data systems, that we've been told, are running off of 90s computers, 2000s computers, and the operating systems haven't been updated. So I just think it's very inefficient that different government agencies, especially ones that work together, they could be utilizing Apollo to its greatest extent to be able to understand, and I might be misunderstanding how Apollo works, but talking about the security function of the data, it's like if you have multiple disparate data systems that could be kind of connected, and depending on what agency you work on, have access to certain parts of the data versus another group, and make sure that everything's all kosher, then Bob's your uncle, and you're able to kind of really build some really good systems, integrate and build efficiencies across departments. But unfortunately, right now, everything's so disparate. You have disparate data systems and everything. It's impossible, I would anticipate, to work in the government right now. Accurate statement. Palantir said they have a data processor, not a data controller. Client define what a data is accessed and how it's used. This is a crucial distinction. Article glosses over while creating a surveillance panic. Again, Palantir does not collect, store, or sell personnel data. The article takes standard enterprise software functionality and frames it as dangerous surveillance tech. It's like writing a scary article about Excel because it could be used to track Americans if someone put personal data in spreadsheets. Palantir is a public company in a democracy with a robust First Amendment. Of course, there are legitimate things to scrutinize and criticize, as with any company, from contracts to clients, strategy. Dr. Karp has said himself multiple times to build Palantir with the idea that dissent is not only the acceptable but required. But don't misinterpret what the software does. Facts matter. Interesting. Really good thread. I didn't read that earlier, but I did see that she posted it. And then Chad, for those of you guys that didn't see, he started going off specifically around. Well, I guess this was somebody else. Palantir doesn't collect data on Americans, but the New York Times does. If you compare third-party tracking on New York Times versus Palantir websites, New York Times makes 38 third-party requests. Palantir makes none. They bash Palantir for data privacy, but sell and track customer data themselves. And I think Chad said something comparable. Maybe he was replying to stuff, but anyway, I thought it was very well written. So let's see. Palantir also brought up screenshots about how New York. Yeah, there you go. Exactly. Miss Julie, thank you for stopping by as always. Let's see. It's pretty public. The spot contracts that have been signed to date for VG. The main difference is VG, at least from what I'm seeing, will write spot contracts to the nameplate capacity. And I don't know if that's like a, how do I say this? I don't know if that's a legal thing, because a lot of these modular trains have a nameplate capacity. And then unfortunately, or fortunately, depending on how you look at it, VG has been able to exceed that in certain cases. So, for example, the Plaquemines is supposed to be a 20 MTPA facility. They think they can get it up to 27 to 28, so 30 to 40% higher than what nameplate is. At the moment, there's only 20 MTPA of spot contracts signed for Plaquemines. And so when it's fully up and running, if they are actually selling 7 to 8 MTPA over on an annualized basis, 7 MTPA is 48 BCF divided by 3.3-ish, because that's about the size of 3.3 BCF is about the size of each boat. That means per annum, they're going to be able to sell 100 boats at spot prices. If you were to be able to get 8 MTPA, times that by 48, divide that by 3.3-ish, it's like 116. So you're going to be able to sell, hopefully, if things go above, 100 to 116. How much is that is instantaneous? You know, do you have to apply a 95% ops efficiency to that? You know, all that sort of stuff. So in that respect, you know, you kind of have to take it with a grain of salt. But Calcasieu Pass, for example, was supposed to be 10 MTPA, and they're selling on average about 12-ish, it looks like. And so that alone is an additional 2 MTPA they're going to be able to produce. That's 96 BCF. Each boat carries about 3. So it's about 29-ish a year. And so if you're able to get that extra margin, that's kind of what we're looking for. So we'll really get to know how that looks specifically after Q2. So for Venture Global, they break down how things look and the actual fees that they're collecting very granularly. And so Q2 might be a little bit skewed still, because you have 15 days, April 1st through the 15th, where they were selling spot prices out of the Calcasieu Pass project. And so you don't have full, you have 7, 8, you have 5/6 of a quarter that will be off of commercial. spas, but you'll have 1/6 of the quarter that's not. And so you won't be able to see verbatim like how well you're seeing, but you'll be able to see I'm assuming they'll split out what's contracted prices and what those are selling for versus what their spot prices are selling at. And that's where we're going to potentially see the real upside, is because if you're able to sell at nameplate, which that's all you need to get, like in terms of financing, right? You need to sell the nameplate. So if you're able to get the spots per nameplate, the banks will lend you the money. Now, if you're able to get 30 to 40% more out of that, whether that's through your own execution or whether that's through that they're under nameplating the facilities themselves, that I don't know. Um, who knows what's happening with that? Then I don't know, but it could work the other way too, right? Like, for example, Henry Hub gas could go to like $10 an MCF, and Europe could go for $11 or $10. And in that respect, um, you're not going to be able to make a big margin from shipping it, because you're obviously going to have to pay costs to ship it and get it liquefied and get on the water. So if you're buying it at 10, liquefying it, that obviously has costs associated with it and expenses. And then you have to ship it. That obviously has, chartering costs, fuel costs, etc. Then at the end of the day, you might end up with a negative. So it pays to have spas, and then it pays to potentially have spot as well. And it really just depends on what you're doing. And so who knows though, like venture could enter in agreements to sell that excess capacity with a spa themselves, right? They could potentially, well, that's not what I mean. What I mean is they might have some sort of predetermined price. They could sell it at spot, or they could come up with a contract with a nation to say, would you be willing to sell this? Kind of like what they did with the original spas, right? Like the counterparties with Shell, Inpex, JERA, etc. When those guys come up with it, they generally have a customer on the opposite end. So they know they're able to lock in at a certain price or close to a certain price or liquefaction fee and sell it at a certain price. And so, anyway, some food for thought. Oh, heck yeah. Wasn't sure, since it's a longer term play, if you would and what your perspective is on that. I mean, my perspective is if I need money, I'll borrow against it. I mean, I don't anticipate needing, more than 200 grand a year. And the way that the portfolio is going, like I should be able to cash flow that, and maybe I transition some of that to like a dividend stock, which is kind of what I'm trialing now, like a dividend fund. This is what I'm trialing now with that 3-fund portfolio. That kind of matches the S&P, gives you a little bit extra dividends. Maybe I write some covered calls on the one thing that give me a little extra umph and income. But yeah, like the thought process is like if I need something or to buy another house or whatever, I have my own assets I could borrow against. Why do I need to go to the bank? And I'd probably get better interest rates borrowing against myself than I would with the bank as well. So why sell, and then pay capital gains and all that? Just doesn't make sense. Let's see. Yeah, a lot of people up on these EVTOLs. I'll probably wait. New sector sometimes can be a little tough. Congrats to the people that are doing well with them. Not hating on them at all. It's just, I need to potentially look into it a little bit more. Yeah, I like VG because it's almost like a guaranteed future dividend, personally. What do I think about turnaround in coal price? I don't know anything about it. What do I think about Nubank? I like Nubank. I have a lot of leaps on Nubank. I wish that the stock would go the other direction. It's kind of been floundering a bit, but I have 2027 leaps, and I'm writing poor man covered calls on it, far out of the money. And so, worst case scenario, it does actually move in that direction. Like far out of the money and like a month out. So like I think I rolled them recently, and with 95 contracts, even just getting a little bit here and there, it trims off your cost basis. So my hope is to get, a pretty decent cost basis. I think I only really need the stock to go to $15 to make it out with my, like, I guess, what's the word I'm looking for? Break even. And so I'm just trying to chip away, right covered, poor man covered calls, and lower that every month when I can, a couple cents here, a couple cents there, and fingers crossed that eventually it goes to $20. But the problem is like, it's already a $50 billion company, so it's not like it's super small. So they would have to start doing some sort of like big buyback or move pretty substantially in Mexico, Colombia, which are kind of the newer regions they've kind of entered. And they're already starting seeing good returns from those. So this is a fake Rolex. It's fake. So if you see me in person, it's fake. Or is it? I don't know. What are your thoughts for future job opportunity growth or decline for petroleum engineers? The industry is getting more efficient, and so, yeah, real Rolexes are for the poors. You know what I mean? A lot of licenses, efficiencies, etc., can be done with less people. So unfortunately, I think you're able to do more with less. Unfortunately, I don't know if you're asking because you're interested. You see the pay. The pay is great. I've almost It's a very volatile industry, we'll say. So in that respect, if job security is a big thing for you, I would not go into this. I would just be cautious. Do something that can help you pivot or build things like mechanical, aerospace, um, a lot of different things that you could potentially do that are a lot more secure. They might not pay as well, but it also depends upon what industry you go into as well. So, did you look into QXO after your chat with Big Dick Ken? Curious what you think. I haven't dove deep into it, although it does seem interesting. Um, if I'm, and I have been teetering about, do I invest in something else? Something else is going to really have to entice me, right? Like, I'm either going to want something that I think is super simple, kind of like a venture global, like, and I think SoFi can be like that. Like, it's a bank stock, right? Like, I don't look at it like tech. I don't expect it to get tech multiples, etc. But I mean, it's going to do well, and it's growing well. It's growing fast. So if it gets cheap enough, it's like a no brainer. So I'm either looking for like a no brainer company that I can sleep well at night, putting money into, and not like add additional risk to the portfolio, um, or I'm looking for something that is worth the potential risk to grow. So QXO, I'd have to look into it a little bit more to see how big it could potentially get. And maybe it's a trade, like I'm not against trades. Think Celsius, think Supermicro computer. If something seems like it's bound for some sort of quick move, I'm not against it. I don't make a living off of that. I'm not very good at that. It's not my specialty. Um, but it depends. But I want to go back to this question. Oil will be around for a long time. So, I mean, if you're entering the workforce today as a petroleum engineer, there's going to be petroleum engineers 30 years from now. The thing that I continue to see, though, is like oil companies, maybe not this decade, like 2030 now, but the second half of the decade, like 10 years time plus, it's almost going to be like you're a petroleum slash energy engineer. where you learn specific things that you need to do to be able to make sure that oil is coming out of the ground and getting through the pipelines or whatever. But the growth in other sectors like solar, wind, potentially nuclear, depending on what happens, is going to grow um, pretty substantially. I could see LNG continue to grow substantially over the next decade. Oil, I see peaking out in 2032 timeframe. Um, I'm actually kind of curious where we're at today. Oil demand, EIA, short-term oil demand. There we go. So I still think we're going up a decent bit. This graphic over here to the right. Global liquid fuels. So 2023 at 102. We grew about 1 million in a little bit going into this year, like 104. Next year we'll grow another 1 million in a little bit. So I think it's going to be some time. And here's the consumption, right? So this is actual production. This is the actual consumption. So you can see we're producing more than we're actually consuming, right? So cheap oil prices. Sorry. Yeah, here's the outlook. This is what I've been looking at this for quite some time, where it's like I don't think the outlook looks great. Where it's like here's the price and forecast, and here's the actual demand, right? And it's always measured. Like people think it's like some sort of huge change. I'm still showing this, right? People think it's some huge change. It's literally the change of a couple percentage points really dictates the um, the price of oil. Just a few percentage points. So I just, we're running at a deficit in terms of we're building more supply than we have demand for. And like we're choking back production. So it just doesn't make sense. But, I think that you're going to need a hybrid sort of engineering degree. Whereas before, oil was growing, from 80 million barrels a day to 100. Now we're really starting to, I don't want to say top out, but especially in the US, I think now and maybe up to 2030, with what I know today, will be the peak for petroleum engineering in terms of the amount in the United States. Now, if their company that you work for works globally, it's a different story. But in the United States, oil production will peak out probably in 2029, 2030, unless we start building infrastructure for the Four Corners and stuff like that. But anyway, stop talking about oil. Sorry, people, people, people always ask me to talk about oil, and then they like their eyes gloss over. Yes, that's the hope. If you ever come to BA or Alberta and you want someone to hang out with, absolutely, my friend. Absolutely. Yeah, the neglectful CEO of AK Media. Ever thought about learning a foreign language? I always had this thought that I would go work in the Middle East. Somebody asked me who provided the hat. Curtis, and it's actually dirty as crap as well. Curtis provided this hat to me. He sent it to me and a few others. And I need to get a sponge and like wipe this thing down. But he provided this hat to me, and luckily, it's my favorite Rockalab hat. Lots of saving, man. People are like, oh, it's fun. It's funny. It's like, Matt, what's your secret? Save a lot, invest a lot. Yeah, it's interesting. I mean, I started off making a really good salary. I didn't stumble in it. I was fortunate to really like petroleum engineering. I still do. I think it's very interesting. Um, very interesting. There's very few other things I would rather be doing. I like investing in stocks, so that's a piece of it. There's a few other things that I wouldn't mind doing as well, but I love what I do. People ask me like, "Why are you still working?" One, I'm not that rich, regardless of what people think, and then two, I actually really love what I do. So, um, it, it- you know, so with respect to that, I really um, just saved a lot of money, man. Just saved a lot of money. I think there's cost benefit. Sorry, there's opportunity cost with a lot of things. I think what people don't realize is they spend money on so many different things. Like I'll spend money on good food, drinks from time to time, but like I don't drive a new car every year, and I don't go on vacation too much. Now I go on vacations a little bit more because I have a little bit excess spending capability. But like I know so many people that would just blow money on everything. And it's like, does everything, literally everything, make you happy? Like if fishing makes you happy, spend money on fishing. But like it I know people that would literally just go to concerts just to go to concerts and they don't actually want to go to the concert. It's like, so you're spending $1,000 a month on concert tickets that you don't even like to do. You're just doing it because you need to spend money. It's like you could have spent $200 fishing, when you like fishing and gotten as much enjoyment, if not more enjoyment, by doing that. So I think there's cost benefit analysis or opportunity cost with a lot of things. So, I mean, I know people that need a new car every year. It's like, do you actually need a new car every year? Um, so love hearing more about VG. It's a good one. Had to build my conviction on Palantir and Rocket Lab from all the Palantir and Rocket Lab weeklies. Buying and accumulating great companies is the goal, and hopefully never selling them. But sometimes the price makes you have to. Um, Only long-term companies that buy are the ones that you can't see the finish line. There you go. New Jersey housing your Monmouth County. That's where the big money's at. I can't afford that. We never know the perfect time to sell Matt, but Peter Thiel sold Palantir. Did he sell all of Palantir? Yeah, it is the most it is the most annoying part. It's like, Matt, are you like it's like I make it very clear. It's like I am always buying. Like I'm not some sort of I don't try to time the market. I'm not like making huge irrational moves. I look at my portfolio. I don't want to say like a steamliner because I'm more nimble than that. But it's like I kind of have one goal: always be buying stock. If you can't buy anything else, just buy the S&P 500. Um, I don't know. Like I generally so when people are like, Matt, like I follow you for a long time, like stock went up 1%. Are you selling? It's like, come on, man. Like if you actually are following me, like, and there's another thing is like other people's perception, they try to make it your reality. And I see this a lot everywhere. So other people's perceptions aren't your reality, you know? Um, so June thinking that I need to alert her every time I go live, that's June's perception. Is that Matt's reality? It's not. That's why I didn't message June to say I was going live. So dumping and pumping too fast. Yeah. There you go. Yeah. People like to ask, like, Matt, what do you think the stock price of Rock Lab's gonna be next month? And I'm like, dude, I don't fucking know. Like it makes me want to be like, dude, I don't know. Like people always ask me, what do you think VG is gonna be at the end of the third quarter on June 14th of 2027? What do you think Venture Global is gonna be? It's like, dude, I don't know. Like I can give you a range of what I think it could be. Do I know? I don't know. I don't know what it's going to be in 10 years. I have a thought, I have a conviction, and that's generally what I think. Like I like to look at what the plans are, give a mental thought as to, hey, what is this company's track record? Do I think they're going to exceed that? Not exceed it, you know. And if they do, what is it going to happen? Do I think they're going to actually pump on news? I think they're going to sell off. Like Neutron, I think Neutron might be a sell the news event. Once Neutron launches, it might go up. You might see a huge benefit, a flush of people coming into the company because they think that it's the next SpaceX, and then they're going to expect that there's going to be another launch like next month because it SpaceX is launching, 3 times a week, 4 times a week, their Falcon 9 rocket. So same rocket has to do the same thing. And I think people are going to be sadly disappointed when there's only one launch in the next, you know, 6 months. I deserve a Switch too. What's the Switch to? Yeah, I try to go at pace. I'm not the best at, not the best at reading, ticker symbols and stuff like that. You can do that on your own, but you're asking questions. You deserve to get answers. I haven't done too much of a deep dive on Oscar Health, but I have looked at their revenue growth comparatively to their stock price, and it does look intriguing. So it's one of those ones where unfortunately I need to dive deeper. Yeah, we got good friends, man. Lisa, Julie, Silly Bunt, Ray Bay, Miss Junebug, even though I give her a hard time. Um, we got great people. Doug, of course. Yeah, you're smarter than me, man. Electrical engineering is tough. I mean that with sincerity. Electrical engineering is tough. Yeah, where are you that you paid 60% capital gains? I think maybe he's just saying that that's eventually where it's going to get to. I hope not. Matt, I noticed you also invest in properties. Do you think the benefits of diversifying into different asset classes outweighs opportunity costs putting that into the market? Once again, this is very dependent upon yourself, right? And I preach this, and I think a lot of people don't do this, and I suggest, and it's one of those things where it's like you have to churn on it, right? It's a lifelong mission, and it's not like you can answer it today one way, and in 5 years time with more knowledge and your lifestyle change and your wealth change, you could answer it completely differently. But I encourage everybody to look at their portfolio as something extremely personal. um you know what works for you might not, like, let's just be blunt. Okay, i'm a i'm I'm a 30 mid 30s multimillionaire, let's just put it out there, and I have no kids. And would I love kids? I would love some kids. I would love a wife. Would love to travel a little bit more, all that. But what I'm doing with my life, I don't have to take risks. Or sorry, I can afford to take risks. It's just me, you know. My sisters don't want me to take risks, so if I die, they get it all. No, I'm just kidding. But that's true though. So if they're watching this, you guys get it all. Unless I have a family and kids, then we're gonna have to restructure that. But for now, it's just you two. Um, and my mom's okay with it. I told her, I was like, Mom, you're not getting any money. Like, I love you, but I don't think you need it. I'm giving it to my sisters. She was okay with that. So for now, as of June 4th, 2025, no kids as of yet. So it's going to them. But you have to realize real estate is different, right? The liquidity is different. Um, you're kind of locked in for 30 years to an extent. I mean, it's not really, but kind of. And, you know, for example, a week ago, long-term rental. So I thought long-term rental would be easier. Long-term rental calls, there's a leak um, behind, sorry, not even. There's black mold growing in the master shower. I'm like, what the fuck? Like black mold? Lo and behold, we look closer. It was recently painted. So it looks like just the way it is, the way that they installed the shower molding in, there's a little bit of a dip. So if water splashes back in the shower, it kind of accumulates water in the corner, and then that soaks up into the drywall, and of course that creates black mold. So had to get a plumber out there, spend $1,500, get everything all cleaned up, um, and boom, like, is that, it doesn't bother me, you know what I mean? But like to some people, it might be like, no, like, so what? It cost me 3 months in cash flow. Like, not a big deal, right? Like, sure, there's gonna be one or two other things. Um, at the end of the day, it's a great property. It's also like if I need to move home, like that's a great property for me to live in. I saw this here in Houston. I'd like to keep the house I currently live in as a rental. Like this house that I'm streaming from right now, great rental potential for this house. But at the same time, like, are you going to clean the house yourself? Are you going to hire somebody? Do you know good handymen? I manage my mom's property in Pennsylvania. It was my dad's first house. It's the first house him and my mom moved into. We rented to students at Villanova University, southeastern Pennsylvania. And luckily, my dad knew a guy that um, he used to paint, for my dad, and known him forever. And he's just an older gentleman that's like partially retired, and he looks after the property for us. Anything happens, like, decking comes up or something like that, we need it redone. He did the kitchen floor for us last year. Small things like that. Like, you need a system of good people, unless you're really handy and doing stuff yourself. So it really just depends. Like my property's in New Jersey. We have to manage that remotely. Like, we have cleaners, or we pay our cleaners well. They're trustworthy. We're my sister's very friendly with them. I keep an arm's distance. I like to keep business relationships. It's no hit on them. They're great people. We love them. But my sister, loves. They're very friend. She's very friendly with them. They have great working relationship. So yeah, I mean, it really just depends. I think a lot of people get invested because they think, oh, I need to get invested in real estate, and they don't realize the lack of liquidity in it. Grant Cardone got sued over this exact thing. He was like, it's very evident when you invest in Cardone Capital, you might not see your money for 7 to 10 years. You might not be able to pull your money out. There might be a financing event or something like that where they sell the properties or they refinance it, etc., where you're able to do a money pull, and the person invested, and then like 2 months in, 3 months in, COVID happened. They're like, I want my money back. And they're like, dude, like, that's not how this works. Like, you're buying potential real estate. Like, you're buying apartment buildings. You can't just because you want to liquidate doesn't mean everybody wants to liquidate. Like, everybody wants this for long-term appreciation, etc. So another thing is, like, I could switch fully to dividends today, right? And everyone would be like, oh my God, Matt switched fully to dividends. Dividend investing is the way. It's like, no, my guy. Like, you have to think, I could fully live off my dividend income. I'm not saying anybody of you. I'm just saying a collective you. Dougie got in trouble with this earlier, where he said you, and people were like, why are you attacking me? It's like, I'm not. But like, if you have $1,000 in your account, like, I'm just gonna be blunt with you, unless you're like 60, I wouldn't recommend investing in dividend only paying stocks that you're going to yield chase and whatever. I recommend, unless you're 70 or whatever, if you have a whole lifelong ability to invest, I wouldn't necessarily rush off and full porting in dividend stocks. But I've accumulated a decent amount of money where it's like, if I wanted to go dividends only, and sacrifice some of the principal gains, I could live like that. I'm playing a different game. I want to continue to grow. Like, I would love to hit the 8-figure mark. It's my personal goal. Am I going to get there? I don't know. I feel like I have a good chance of it. But it really depends on what you want. And so I always go back to 5 things, right? Objective is key. Like, what are you doing it for? What's your time horizon, risk tolerance, um, and how much capital are you adding every month, quarter, annually, etc. And then how active or passive you want to be. Um, so some people, like I said, don't mind getting a phone call. You just work through it. You work through it. In the long run, if you buy at the right price and you buy the right property that's in the right location, you're confident that you're going to get equity gain or cash flow or what have you. So I would just be cautious specifically about what you're getting into it for. So June 30th. So in 24 days, it's probably going to be trading at $0. About you and me going live. You can join on, man. You can join. We're waiting for June to drop her OF. Exactly. There he is, the man that provided the hat. Chris also doesn't have kids. That's right. Somebody give this man a kid. I've only gone offshore twice. We were drilling an exploration well. I don't want to say too much. We're drilling an exploration well. It was successful. Got liquids. It was awesome. It was a lot of fun. I learned a lot. Have I seen price drops from real estate? I haven't seen any in mine, but definitely less action. I'm seeing 10% cuts all the time. Or not 10%, $10,000 cuts all the time. Some of them were way overpriced in general. The ones that I'm seeing like $5,000, $10,000 cuts, I wouldn't be surprised if they get sold at these prices. But some of them are still trying to act like it's 2021, 2022. It's insane. Mid 30s, poor AF. I had rentals. It was a stupid idea. Great learning experience. Yeah, some people. I haven't been burned yet. People are like, "You'll learn." Um, yeah, my family always did real estate, like my extended family, um, and so far I've done well. So, yeah. So you love Pfizer, and I think you've been asking me about Pfizer for a good couple of years. You may have been asking me about Pfizer during the pandemic. There was a dude who would come on my live streams all the time, and Pfizer was trading for, like, this was like 2020, 2021, maybe 2022. And Pfizer back then was trading for like $45 ish a share, something like that. It may have been you, it might not have been. And they were like, I swear, man, it's going to go to 100. And 5 years is probably better. Like, I swear, bro, it's gonna go to 100. And I'm like, it might, man. And I think it might have been 2022 because I think they were like, it was at 59, $60, and now it's back down and it's gonna go back up. And I'm like, dude, I was like, I don't know what their pipeline looks like. I was like, what do you know? So anyway, people love Pfizer. I I think it's tough. I would wait for it to shore up a little bit before I were to put money into it personally. But it's just tough, especially with the current things ongoing with the Trump administration. If Neutron takes off and gets rolling, would you invest in real estate around the launch site? There's a lot of places I've looked at in that area. I've looked at the Outer Banks. I've looked at Virginia. So yeah, I've looked at potentially. I've tried to make it make sense from like a rental perspective. Um, Not a lot of places are big tourist attractions. So Chincoteague is pretty good. You could buy a place in Chincoteague, but you might have to put a little bit extra down to make it work in cash flow. Um, but I'd like a place that's a little bit on the bay. Yes, that's kind of the thought process. It's like if I can get there, then I can get there. Yeah, Hot Ken, man, Hot Ken and his QXO. How am I going to celebrate? I don't have a lot of hood. I think I just have a leap or two, so I'll just be happy. Um, Happy that people are doing well. Yeah, June's opening her OF, dude, so she could finally afford YouTube Premium. I have thought about Boca Chica, like Brownsville, Texas area. Um, yeah, I've thought about it, but we'll see. See, Palantir gains, my man. Congrats. Yes, I have a good buddy who does real estate. Sorry, not real estate. He builds houses, and I've thought about potentially lending hard money for that. Um, do I have an opinion? These YieldMax gaining popularity like Misty, Twitter Space with these guys answering questions weekly. Hey, man. I mean, I hope that everyone does well. I have another. I won't give too much detail, but I have a friend that I get lunch with regularly. If he's watching, I haven't seen him yet in the comments, but if he is, how you doing, brother? And he's all about Misty, 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 Misty. And you know, I personally would stay far away. I think in the short term it's going to be okay. I do because I think Bitcoin is going to continue to do well, and Bitcoin obviously impacts MicroStrategy. But I would not be going into 2026 holding MSTY personally. I think a lot of people are looking at how great MSTY is doing, the dividend, um, and so for me, maybe somebody hasn't hit you with reality, and maybe you're right, and I hope that you are if you're very bullish. But I think a lot of the value of MSTY and why it's been able to at least stay flat to slightly down is because the underlying stock is up 135% in the last year. And so when you look at MSTY and you're like, oh, but it's already paid me back, whatever amount in my dividends and then some, keeping in mind that in November, December, it was at all-time highs, and you're now half that price, and you're still at all-time highs in MSTR, and overall you're down 38%. It's like, imagine if the stock actually went down, and people are like, but you're not considering the dividend, sir. And it's like, I get that. It's just, let's just do a quick comparison. It's like, I get it. You're getting 100% yield. Congratulations. But, are you reinvesting that yield? Are you taking out cash? So YieldMax is in yellow. Am I sharing? I'm not sharing. YieldMax is in yellow. And that has gone down 35%. This isn't dividends reinvested, but down 35% from a principal perspective. The underlying stock is up 131%. And you're still down 35%. What happens if the stock stays flat? And it's like, okay, great. So you get 100% return. Is part of that 100% return based off the fact that it's going down 35%? So in reality, my thought process is like, So in reality, it's a 70% dividend, 75% dividend, maybe 65% dividend. But because it's down 35%, that shows up as 100% in the last 12 months. And so if it goes down another 35, 50%, okay, it's paying you whatever you think. But in reality, it might pay out, 65 to 75% of this. But it's like in reality, you're just chasing your tail? And so then you think like, all right, well, what is it? PLTY? Granted, this one started less than a year ago, but Palantir is up 500% over the last year, and this alone is only up 26%. You know what I mean? So I'm not going to be able to convince. Some people are just unconvincible. They think that it's the thing to buy into, um, and I would just be cautious. I have a couple buddies that are like, you know what, I'm only collecting the dividend in cash, and then once I get my returns, then maybe I'll start to reinvest some of it, and try to grow it, etc. But I personally would just look at some of the other funds. I would suggest don't look at some of the other funds um, where the underlying has been flat for the past year. My opinion on quantum, I'm not educated enough. I'll leave that to somebody else who's way more educated on the topic. I still think I need to see a little bit more um, movement before I invest in the sector. Yes. And I had people like try to be like, Matt, but even if the stock stays flat, I'm like, you realize that when you're buying these things, you're paying a premium to own them. And so, like you stated, Curtis, you don't own the underlying. And so you're buying options. You're pretty much doing kind of like poor man covered call in that respect. So if the option stays flat, then you're always going to be heading towards zero. So unless the underlying goes up and to the right, even if it does, you're probably still going to end up negative due to drag on the amount of fees that you're paying or premiums that you're paying to just have the covered call opportunity. So then imagine if the stock is flat. I wish everybody the best. I don't ever want anybody to do poorly. Um, yeah. Hi Matt, appreciate your input on Rock Lab. Starting watching you when you went live with TJ. Do you have any thoughts on Bull? I actually reached out to TJ. I don't know if he got his number changed. Hope he's doing well. Love TJ. Um, Good guy. Um, it's been over almost 2 years since I've seen him in person. So hopefully this year I get to see him. It'd be good to see him again. Do I have any thoughts on Bull? I'm assuming you mean Weeble. I don't. I haven't done any research on it. It's under IPO. It intrigues me. Sometimes when things go below IPO, it doesn't necessarily mean that it's bad. $5 billion market cap. It's profitable. It seems like. So I'd be curious, especially to see how fast it's growing. Webull was really big. Yeah, Webull was really big in 2020, 2021. They were giving away a lot of shares. I know Graham Stephan was pushing it a good bit because he was getting free stocks and I don't know. I don't know much about the spending bill. I haven't done as much of a fine tooth comb read through as I'd like. So anyway, I know I didn't do the market close any justice, but it is nice to see that we are closing the middle of the week out slightly flat, 5,900-ish on the S&P. And so with that, I'm cautiously optimistic. I don't know what to think. I personally still think that we'll see a little bit of a pull down. You know, generally speaking, you see waves in the stock market as always. Like we're at the top of a wave currently. Will we see a pullback? Probably. And then I think we'll go towards all-time highs. Will we see all-time highs before then? Before we have a pullback? Potentially. I guess it all just really depends. I just still think that there's rhetoric associated with tariffs that are ongoing. But I think overall the market's still healthy, and I think there's still an opportunity close out the year in a good manner. I know Jamie Dimon was freaking out about bonds. You think the bond market's going to end up shitty? I don't know. I don't. But anyway, you guys rock. I appreciate you. Hit the like and subscribe button if you have not already. Most of the time, I think to chat, you have to be involved. Oh, I did have two chats. Sorry, I almost forgot these. So appreciate you guys. Nothing wrong with you. You need a life partner. Find yourself a lovely lady. I did read this one out. Thank you for the $5 super chat, Richie. You're the man. And we have George, a member for 17 months. Much appreciated, my friend. Well wishes. Thank you for the continued support. 17 months. I think you're one of the longest members on the channel. So much appreciated. Continuing to support. As always, there's the ability to support the channel just being a member. Patreon, I think I opened up a $3 Patreon if you want to downgrade. Some of you guys are locked in at $10. It's I'm downgrading to $3 because I'm no longer doing what you would call it. What's the word I'm looking for? I'm no longer writing. You know, it's more of a donation than anything. So you can find that in the description. So yeah, I feel like I can't charge $10 if I'm not writing. Apologies to y'all, but if you do want to join the channel, I think it's $3 in terms of joining the YouTube. It just helps support me, and that money just goes back into the market. It's not like I'm doing anything crazy with it. I'm not buying Lambos or anything. And that's another thing. I think people are like, oh, like maybe Matt will eventually buy a Lambo. It's like, if Lambo was the goal, I would have had a Lambo a long time ago. So anyway, but yeah, Patreon's there as well. Trying to think if there's anything else. We'll see if I get on stream tomorrow. If Amit isn't going, then maybe I can make an opportunistic evening market close, do an actual market close rather than a post 3 or 4 hour market close like I did this evening. But if it stopped raining, maybe I'll go for a quick walk around. Then it's cooled off a little bit. And as always, appreciate you guys. Over 100 people stayed throughout the entirety of the stream, so much appreciated. And I will talk to you guys soon, hopefully tomorrow. Good luck, and as always, happy investing.